This is Nightly Business Report with Tyler Matheson and Susie Guerin.
Housing goes boom. Prices rise by the most in nearly 7 years, and stocks take the good news and run with it. We talk with economist Robert Shiller about what's next.
Two techs go bust. Well, not exactly, but Dell and BlackBerry, former tech titans, are in a fight for their lives. Can they come back?
And courtroom drama. The Supreme Court hears the first of 2 cases on same-sex marriage. What are the stakes for business? When we'll have all that, plus the simplest trading strategy you've ever heard of tonight on Nightly Business Report. Good evening, everyone. And Tyler, we had a lot of positives today about the stock market and also about the economy.
And those economic numbers really did drive stock prices higher today. The Dow has done it again, climbing to a record close, rebounding from Monday's losses. Investors shook off concerns about the debt and banking crisis over in Europe and focused instead on higher home prices in January in the U.S., which rose at the fastest pace in almost 7 years, and on a sizable jump in factory orders for big-ticket durable goods in February. When all was said and done, the Dow was higher by 112 points, closing at a fresh all-time high of 14,559. The Nasdaq was up 17, and the broader S&P 500 added 12 points, now just a point and a half away from its own record high close.
Well, as Tyler just said, home prices went through the roof in January, up more than 8% year over year, and this is in the nation's largest cities. It's the biggest jump in prices since the summer of 2006. And that's according to the latest S&P Case-Shiller Home Price Index. Now, some of the cities that took the hardest hits during the housing collapse saw some of the biggest gains, including Phoenix, Las Vegas, and San Francisco, all with double-digit price gains. And joining us now, the co-founder of the Case-Shiller Index, Robert Shiller. He's also economics professor at Yale University. Robert, a lot of people looking at these statistics, if you're a home buyer or home seller, will come away with some conclusions. If you're a home buyer saying, maybe this is the time to buy that house I've been wanting to get because prices are going to go up. And if you're a home seller, maybe rethink holding off a little bit before selling because you might get a better price. So how should people strategize through this?
Well, it's very important to keep a distinction between the housing market and the stock market. Momentum is much, much stronger in the housing market. So the fact that we just set a record on the Dow means very little about the outlook for the stock market. But the increases we see in the housing market mean a lot. It's not as efficient a market. So this might be a time to accelerate a purchase of a home to get the increases that are likely over the next year.
Are you at all worried that there might be a repeat of the so-called bubble of the mid last decade?
Well, I don't think it's going to be as momentous as that one. That was the biggest bubble in the history of the United States. So we don't expect that to happen again. And in fact, in history, when we've seen big booms regionally in the United States, they've often not repeated for another half century. So I don't expect that, but it does seem possible that it would be a substantial bubble, and it depends on a lot of things, including political factors.
Robert, we've been hearing anecdotally stories of a lot of people saying that investing in real estate, this is a good way to make some fast money, buying properties and then flipping them. Does that strategy make sense to you?
For people who know what they're doing, I think it naturally does. One thing that's changing is that, I don't know about flipping, I think buying it and holding it as a rental or selling it to someone who wants to be a landlord. We need to see some of our properties converted to rentals because that seems to be a shift, for now at least, in public demand. So I think it's a natural economic thing to be doing right now.
As you take apart the housing market or you analyze it, what's making prices go up so much?
Usually we don't know the answer to that even after the fact. But I'll give you the first thing that comes to my mind, the Fed, okay? Very low interest rates. In fact, in December, we set an all-time record low mortgage rate. It was 3.35%, and it's not much up from that today. That matters. That is, for buying a house, it's that low mortgage rate that might be the more important factor than the outlook for home prices. That's big, to be able to borrow so cheaply and lock it in for 30 years.
Yeah, that is pretty incredible. Can you talk us through a little bit on some of the numbers as you look at the metro areas of the cities on your list? I mean, they're going to pull up a graphic here. Phoenix was up the most year over year, 23%. San Francisco, 17.5%. Then you look at the bottom of the list, New York City, up just 0.5%. What kind of conclusions should we draw from looking at these numbers? And what's the story behind the numbers?
Short run, go for Phoenix. Long run, go for New York. By the way, the financial sector is very low priced now too. You know, New York is the world's financial sector, and it looks beaten down right now. But my feeling is that that has a good, strong future.
Let me get you as a student of value to comment, if you would, on the values in the stock market today. Do you think the market is priced too high for the economic underpinnings?
It is priced highly. I have my own CAPE index, or cyclically adjusted price earnings ratio, which uses a longer average of earnings. And that ratio now is about 23, which is high. But then you've got to remember that interest rates are very low, so it's not unnatural for that to be high. So what I'm thinking is, based on just the CAPE ratio, the real return on the stock market for the next 10 years might be something like 3% a year, which isn't bad in the current environment. That's way better than your 10-year Treasury.
All right, we'll leave that for another conversation, but thank you so much. Robert Shiller, co-founder of the Case-Shiller Index, also economics professor at Yale University.
Well, today's Case-Shiller house price report confirms why Americans are once again bullish on real estate. According to the latest CNBC All-America survey, 33% believe their home prices will rise during the next year. That's up from 9% from November, and it is the highest that number's been since December of 2007. 54% think home values will stay the same. Only 13% think they will decrease. And while stocks and real estate look promising, gold is the preferred choice of American investors. 35% say they believe gold is their best investment. 27% of the respondents named real estate. 21% like stocks the most.
So while most Americans prefer gold, that investment hasn't paid off recently. Jackie DeAngelis takes a look at why the precious metal is looking tarnished.
Many investors are wondering if the gold rush is over. As the Dow has made a record run and money is rotated into equities, bullion has remained range-bound. But what lies ahead, and is it time to add the precious metal to your portfolio? Traditionally, gold has been the ultimate safe haven asset. When fear runs high, gold has run even higher. One recent example, the summer of 2011, when Washington gridlock prompted the S&P to downgrade the debt rating of the United States, gold hit an intraday high of $19.23 an ounce. Gold has also managed to rally alongside the markets. For example, when the Fed announced several rounds of monetary stimulus, bullion moved higher as an inflation hedge. In the past few months, though, gold hasn't managed to move much. The range-bound metal wasn't where investors flocked when they were worried about the fiscal cliff, and it certainly hasn't been where they've turned as the markets have climbed higher. Traders say gold's behavior is odd, but explainable. For one thing, it's been held back by dollar strength.
Well, gold, like many other things, is denominated in U.S. dollars, right? So when there is strength in the U.S. dollar, that implies there's weakness in a foreign currency. So there is less gold that can be purchased per euro, per yen, per Swissy.
In addition, there's been evidence that funds are selling gold as they rotate into equities.
There has been outflows in terms of the GLD. It's the most common vehicle for these funds to participate and initiate some gold exposure. So the open interest has come off substantially in the GLD.
And even when gold does seem to catch a bid, it tends to be short covering, not necessarily new buying. But still, experts say that all signs indicate that gold is headed higher. Here at home, fears of the impact of sequestration and new debt ceiling deadlines are a cause for concern. Abroad, the Eurozone debt crisis is far from over, as highlighted by recent events in Cyprus.
We have this crisis coming out of Cyprus, and so there is a demand. This is the definition of headline risk. So we have this demand for safe haven.
For Nightly Business Report, I'm Jackie DeAngelis.
Two blue chips in the Dow hitting all-time highs today, and that is where we begin our market focus tonight. American Express and Johnson & Johnson both hit records as the broader market gained. Amex on the 150 million share buyback plan announced yesterday, and J&J after UBS raised its price target on the stock to $87 a share from $81. Johnson & Johnson also part of the NYSE Pharma Index, and that index hit its highest level in almost 12 years today. Here are some other top performers in that group. Bristol Myers Squibb leading the way, up almost 25% year to date, followed by Eli Lilly, Pfizer, Amgen, and Merck.
Warren Buffett's Berkshire Hathaway is set to become one of the 10 largest shareholders in Goldman Sachs. The move comes as Goldman gives Berkshire millions of shares in place of warrants dating back to the depths of the financial crisis. That's when Buffett came to the rescue of the Wall Street firm by investing $5 billion. Goldman stock was almost flat on the day, closing at $146. At that price, Berkshire would receive more than 9.5 million shares. And Netflix was the biggest gainer in the S&P 500 today after an analyst boosted the company's price target to $225. He says the company's streaming video business has the potential of drawing in more subscribers. Netflix shares have doubled this year, and they rose almost $10 today to $190. That's a gain of 5.5%.
An historic hearing at the U.S. Supreme Court today on whether same-sex couples have the right to marry. And any potential ruling will have enormous implications for businesses. John Harwood joins us now from outside the Supreme Court in Washington. John, what did the justices hear today?
It's a two-day set of arguments on same-sex marriage, Tyler. Today, the arguments were about California's Proposition 8, which is a ballot measure a few years ago that banned gay marriage after earlier that right had been conferred in California. Justices are going to have to decide whether the state can take away a right after having granted it. The arguments tomorrow are going to be about the Defense of Marriage Act, which was signed by Bill Clinton in 1996. Even Bill Clinton has said that it's unconstitutional, but we'll see whether the justices agree. There was some caution expressed in their questioning to the lawyers today.
While we're waiting, John, to hear from the Supreme Court on this historic case, and many businesses are already providing benefits for gay couples. They've already gotten kind of ahead of the law and the culture. Why the disconnect?
Well, business executives work on a different metric than politicians seeking votes. Business executives have approached this issue as a bottom line issue of making their employees happy. So if you look at numbers like these compiled by the Human Rights Campaign, you've got 99% of businesses that already have anti-discrimination policies on the basis of sexual orientation. 89% say that they provide domestic partner benefits to same-sex couples. You've also got 13 out of the 20 biggest companies on the Fortune 500 list that got a perfect score on those sorts of issues. So the business community is ahead, the politicians are catching up, and we'll see what the Supreme Court justices decide in a couple of months.
John Harwood, we have to leave it there. Thank you very much. John Harwood reporting.
And coming up on the program, Dell and BlackBerry, two iconic American brands at a crossroad. We'll look at what happens when technology kings get beaten at their own game. But first, here's a look at how international markets closed out the day.
Apple shares in a serious swoon since September were off slightly today. This despite positive comments from an influential tech analyst and a fund manager. The analyst, Gene Munster of Piper Jaffray, reiterated his $767 price target on the stock, more than $300 above today's close. He says the next 2 quarters for the company will come in below consensus estimates as iPhone sales slow. But then he thinks new product launches will power demand and the stock. Fund manager Channing Smith of Capital Advisors Growth basically makes the same argument. His forecast $600 a share by New Year's.
Well, before shares of Apple climb any higher, the company has to battle concerns about declining sales of its signature products, iPhones and iPads. At China's Foxconn, this is a major supplier to Apple, and where many of those Apple gadgets are made, those fears may be real, as workers describe a slowdown in production. Eunice Yoon has more.
What happens at Foxconn is seen as a barometer for the tech industry. We heard orders at its Shenzhen factory had slowed, so we headed to the notoriously secretive manufacturer to find out what's happening behind the heavily guarded gates. Outside the factory, we spoke to a half-dozen Foxconn workers. Only one would talk to us on camera, but they all said the same thing. There are no orders, he says. Generally, there's nothing to do. Like many migrants at Foxconn, the worker moved from the countryside to make big bucks in the big city. He, like the others we spoke to, said Foxconn pays the best. Big clients like Apple and Dell mean steady orders. To the workers, that means a chance to work longer hours and get better pay. But not since February. The worker who inspects iPads normally rakes in $480 a month. Now he says he'll be lucky to earn 2/3 that. Sometimes, he says, they don't do much at all. There's no overtime, he says. A lot of people have left.
Foxconn employs over 1.5 million people in China, but these days the workers tell us that the company isn't hiring as much as before.
In a statement, Foxconn says 97% of employees returned after the Lunar New Year holiday and adds this period has always been considered low season for the industry. But all the workers who've been at the factory for over 3 years said the slowdown is more pronounced this year. What the workers tell us could be a sign of weaker sales, something we'll know for certain this earnings season. But this worker may not stick around till then. Killing time is pointless, he says, and might as well check out other jobs. For Nightly Business Report, Eunice Yoon, Shenzhen.
Also, if you think Apple is facing challenges, get a load of this. It's nothing compared to what's been happening at Dell and BlackBerry not long ago. Both firms were product and stock market kings, must-haves in many portfolios. Today, Dell is in the middle of a buyout battle, and BlackBerry is battling for its survival as an independent company. Technology correspondent John Ford is here, along with Andrew Ross Sorkin, who wrote about Dell's predicament in today's New York Times. Welcome to both of you. Andrew, if I might start with you, in your column today, you referenced some criticism that the founder of Dell, Michael Dell, has been receiving for the way he brought forth his buyout proposal. Talk to me a little bit about that and whether you believe that in any outcome here with Dell, Michael Dell will still be a part of the company, or won't he?
Well, the second part of your question is still the question, whether Michael Dell remains part of the company. He clearly wants to own the company. He tried to buy out the company, and in the process has put it in play to the point where he may not ultimately be part of the future of this company. To your first question, there are large issues around management-led buyouts, and there are questions among shareholders who are saying to themselves, why does Michael Dell want to buy this company? Does he think he's buying it on the cheap? And if he's buying it on the cheap, why should I sell it to him? And Leon Cooperman, who was quoted in the piece, said this is the equivalent of insider trading. He knows something that the other shareholders don't. And to some extent, you could argue that now that we have a separate offer from Blackstone, which has come in with a bid of $14.25 against, by the way, Michael Dell's bid with Silver Lake of $13.65 and an additional bid by Mr. Icahn of $15, you could say that perhaps the original bid was too low.
You know, John, Dell was once considered one of these tech darlings that could do no wrong. And it seems like the issue here, whether it's a private company or a public company, its business model is out of date. You know, how do they survive and how do they make that changeover?
Well, they got so big and so popular making PCs more efficiently than anybody could at the time. And what happened was everybody else got better at making PCs, and now PCs are just less popular than they used to be as people are using smartphones and tablets. So really what they need to do is one of two things. Either figure out how to be a great mobile player. They've tried a couple times and haven't figured that out. Or push into the cloud and enterprise services. They're doing a bit better at that, but meanwhile, this big PC weight is just dragging them down.
They missed the move into mobile big time. That was really one of the big issues here, right?
That's part of it, but they tried some mobile products, but the problem was they were depending on software from Microsoft or from Google. They were depending on other companies to figure out how to put the objects, the products together. They couldn't compete as well with Apple, which designs the whole widget.
So, Andrew, speaking of a company that sort of missed a big move, BlackBerry, another company that we're talking about in this segment tonight, it missed the move to sort of touch screens and multi-function devices. Can this company come back?
It's going to be a struggle. I hate to say it because I'm a BlackBerry user and I have loved my keyboard from the absolute very beginning, like so many people out there. but I also carry around an iPhone these days. And I think that's become indicative of what you're seeing, by the way, along Wall Street. You're seeing it in the government. You're seeing it even the Defense Department and others who've taken up other devices. It's very difficult once you start looking at the ecosystem that is the Apple OS, the operating system, and all of the apps that are around that, to think that BlackBerry will ever be able to be what it used to be. Having said that, if BlackBerry can just eke out small little gains, they can make big wins for the company and for the stock. And so I wouldn't count them out just yet.
Let me ask both of you this, Andrew and John, but let me start with you, John, is that as you look at these companies and others of this ilk, is it a technology problem that got them here, or is it a management problem, or is it both?
It really is both. I mean, in both cases, management was maybe a little too proud of what they had already accomplished, didn't look around the corner and see what was coming. On the technology side, both had a similar problem. BlackBerry didn't really design a great operating system, an OS that could do web surfing, that could handle apps. Apple had that already. And when they saw Apple doing it, they figured they were fine ruling email and messaging just like they had done before. They need to now figure out what the next big thing is going to be. Don't just match iOS and Android, but skate to where the puck is going to be.
The early word on the BlackBerry 10 is not all that favorable in the U.S.
Well, the word is a lot better than the early sales. So it got some decent reviews. People said, yeah, this does some things that other phones do and some things that they can't do. But it hasn't translated into sales because they haven't communicated to people why buy this instead of the stuff all your friends have.
Andrew, what are your thoughts on all of this? What's the lesson here? It sounds like a Harvard Business School case study.
The lesson is that both of these companies need to be in turnaround, and it's a real gamble either way, which way they go. You know, some people look at this Dell transaction and these shareholders say, they're not getting enough money, pay me more. But, you know, it's just as possible that in 5 years from now, Michael Dell makes a fortune as he loses a fortune. And that's the thing I think we all have to remember.
Andrew Ross Sorkin, thanks very much. John Fort, great to be with you.
Thank you.
And still ahead, why it's more important than ever to teach children about the value of a buck. But first, a look at how commodities, treasuries, and currencies fared today.
Teaching children about money, it's an issue every parent struggles with. Now, schools are also focusing on this, and some students in the country are already required to study personal finance. As we continue our series, Hitting the Books, Sharon Epperson reports that the push to spread that knowledge and make it mandatory is growing.
One big thing, we went over how to form a budget.
Financial lessons become life lessons for students at Reading High School in Ohio.
I actually work with my mom, and we formed a budget that we still use, and it's helped us tremendously.
Since the U.S. economic crisis, many schools and teachers have been searching for strategies to help students deal with the real-world economy.
As our financial industry continues to get more complicated, the lessons are becoming more and more painful. So it's time that our legislators recognize that we need to evolve, our education system needs to evolve, and we need to prepare our children to be able to manage their money in a much more complicated financial society.
Brian Page's class is an example of what many would like to see become law, a requirement that all high schools in the state offer a personal finance course.
It's our hope that people learn that at an early age and then carry that throughout their lives.
Ohio is one of 46 states that includes personal finance education in standard curriculum for kindergarten through 12th grades. But there's no mandate to teach it yet. According to the Council for Economic Education, only 13 states require high school students to take a personal finance course to graduate. There's a national push to grow those numbers and expand requirements starting in elementary school.
It's great that more and more states are adopting a mandatory financial education course, but waiting until high school is too late. It needs to start in kindergarten, and there needs to be a foundation laid every single year.
In the next few months, the Treasury Department is expected to launch a website offering teachers ready-made personal finance lessons that can be incorporated into state standards for math and English in schools across the nation.
We need to know that a student in Michigan in the 4th grade is learning what a student in Arizona in the 4th grade is learning. It is so far beyond how you write a check. It's tremendously empowering to teach children you have control over your own life.
This course is more than just about how to become rich. It's about leading a rich life. When they come back and they tell me that they have opened a savings account, or they tell me that they have a high credit score, or they tell me that they have a direct deposit into a 401k which they're fully matching, that's how I measure my impact on them.
That's the real-world test of lessons that can help them throughout their financial lives. For Nightly Business Report, I'm Sharon Epperson.
We asked on NBR.com what you thought about teaching financial literacy to younger students. Kirsty Billamoria said very important, especially since it appears that parents have abrogated their responsibility in this area. And Steve Silva said extremely important, and I applaud this long overdue move. And finally tonight, do you want to make money in the stock market? Well, the answer may be as easy as invest on a sunny day. According to a new book by Adam Alter, an assistant professor at NYU's Stern Business School, researchers studying trading patterns across 26 world markets found that between 1982 and 1997, stocks rose more on sunny days than on cloudy, snowy, or rainy ones. Or maybe just go with simple-sounding names. Alter and a colleague at NYU found after studying hundreds of U.S. stocks that those with easy-to-pronounce names outperformed the tongue twisters. And as Warren Buffett says, simpler is better. It was a sunny day here, Susie, and stocks moved higher. It was cloudy yesterday, and stocks were down.
Do we have to start doing a weather report? Tomorrow's supposed to be partly sunny, so we'll see what that does to the market.
Mixed day for the market.
That's Nightly Business Report for tonight. I'm Susie Garrow. Thanks for watching.
And I'm Tyler Mathison. Have a great evening. We'll see you back here tomorrow night.
I'm Susie Garrett with a Nightly Business Report news brief. The Dow has done it again, climbing to a record close, rebounding from Monday's losses. Investors shook off concerns about the debt crisis in Europe, focusing instead on higher home prices in January, which rose more than 8% to the fastest pace in almost 7 years. Investors were also encouraged by a sizable jump in factory orders for big-ticket durable goods in February. The Dow shot up 112 points, closing at a fresh all-time high of 14,559. The Nasdaq up 17. The broader S&P added 12 points. Warren Buffett's Berkshire Hathaway will soon become one of the largest shareholders in Goldman Sachs. The investment bank is allowing Berkshire to buy 43 million shares following Buffett's big investment in Goldman during the financial crisis. Be sure to tune in to Nightly Business Report right here on your public television station.